So the question is, why don't we do this? Why don't we fix this problem? We're letting foreign banks, we're doing this, we're doing that. Well, these other liberalizations are policy measures. They don't require financial input. Okay, the liberalization of the foreign exchange regime requires that. Okay, if we decided, okay, we're just going to liberalize and let the market figure out how to balance supply and demand without intervening, the underlying shortages are still going to be there, and the exchange rate is going to balloon.
The financial sector, especially the bank sector, easily they can reach and they can check the feedback from her country and which region we have strong customers. So for the customer interaction is very important. Generally, what I want to mention, especially for the financial sectors, we have a big data center you can use and you can collaboratively work, especially to become the digitalization. We have a lot of expertise, and the expertise is ready to support these sectors.
Even if the standards are called a recommendation, but having a major deficiency or being non-compliant in most of the recommendation has its own negative impact in the financial and economy of any jurisdiction, especially in a foreign direct investment, correspondent bank service, remittance agency, as well as international loan and donations.
Here we can bring a solution called mobile platform and service. We can build a mobile banking platform here. Based on this banking platform, it's just one application with several applications inside. It's like maybe some of you have heard that Alipay or WeChat, they have a lot of mini programs. It's like we made one application as a phone. You can install many other applications inside the phone. But now you only need one mobile application, but it can contain many other applications. This platform can help you to do that.
But we don't want to go there to start taking care of the elderly. We also want to enjoy good life. We also want to live long, not in poverty, but in prosperity.
You need to rev the economic engine of Ethiopia. And the best way to do that is to increase the velocity of financial services. And the right approach, get it more competitive, get people who have advanced capabilities to come into the system. For existing players, it's not all loss. You collaborate, you compete, and the public wins.
I think as Ethiopians, we've all been comfortable in closing up our economy and not letting anybody in. And I think we've been cozy for that for too long. And now suddenly we're leapfrogging and we're a signatory to the African Free Trade Agreement. So in that sense, I think we all need to agree that we've done quite well. When you discussed earlier this morning, Ermias, that we have to take care of many infrastructures. And we've done well in the physical infrastructure, but not so well in the softer ones. So we need to discuss about institutional capacity. And specifically, my question is about human capacity. I don't want to go down the route of how many universities we have and how many graduates we have every year. But with opening up the economy, do we really have the human capital to serve the many projects that's in the pipeline by the government?